Hey guys, how's it going? Value Venture Investing here. So here we are again today talking about Tesla. Now, as you guys know, this is a position that I added to not too long ago, about 180. Probably should have sold already because, as I'm going to tell you right now, it wasn't the best quarter in terms of how the stock is responding. Now, myself, I'm up almost 40% on this little position that I've added. I'm down on my other position that I had from a while back. So today, Q2 2019, Tesla released its Q2 results, and the stock right now after hours is getting hammered. As of recording this, it's down about 11%, so it's retracing quite a bit that's going on. But I don't think this quarter is quite as bad as it seemed on the surface. So I'm going to go over the quarter with you guys really quickly because I think it's something that should be talked about briefly. And then I'll give you my opinion what I'm going to be doing with my extra shares and such. So the revenue this quarter, first thing came in was about 6.349 billion, so about 6.35 billion. Now the estimate on this was about 6.375, so that wasn't a huge miss there. But it was still a miss in terms of the kind of average estimate. But I mean, estimates were all over the place, right? One thing to keep in mind though, that this was 60% year-over-year growth. Now, what it appears that Tesla's doing, as you'll see as we go through this, is they're really trying to ramp up production continuously. They're not focusing so much on profitability, but they're trying to be able to fund themselves, and they think going forward that they're basically going to be able to fund themselves. So you'll see a little bit more of that later. Earnings per share, they were $1.12 a loss per share, and the estimate was 31 cents. I mean, those were kind of all over the place a little bit too, but that's a pretty nasty miss there. So that's probably one of the reasons that the stock's down a bit. This is probably a bigger one in my opinion. Gross margins were about 18.9%. And, you know, in the past, I think the last couple quarters, gross margins were around 20%. So if you guys remember a video I did a while ago where I was pretty bearish on Tesla, even though I started to get a little bit more bullish now, I predicted that the margins would probably stay around here. So this is a bad spot, but this is to do with the fact that they're really starting to sell less of the higher margin. They're going more into the Model 3, which are a lower margin vehicle, right? So I think this might change a bit when we see the truck and stuff like that. That's what I'm really excited for. But that's why you're seeing gross margins kind of under pressure like that. Deliveries were really good though. Deliveries were all-time records. So 95,356. So that's an all-time record for Tesla. You probably can't see this right here, but the Model 3 and the Model S. So this is what I was talking about before. 321% year-over-year growth for the Model 3, minus 21% for the Model S. So as you can see, there's a little bit of cannibalization, and everybody wants the Model 3, and that's what they're focusing on, which isn't necessarily a bad thing. I mean, this was on Elon Musk's kind of master plan, but I mean, that's what's hurting margins, and that's what's really kind of impacting their profitability. But on a good note, we see free cash flow. And I believe this was a non-GAAP measure of 614 million. Now this is versus about 136 million. And you know, if you know anything about me, you know that I love free cash flow. And I think that's what's generating the cash and allowing them to build up cash balances and to also be able to fund themselves, as they say. So we're basically seeing all-time records of $5 billion. So that's one of the things that I was most concerned with Tesla, is that they're going to end up running out of money and going bankrupt. Even though, like I said, I become more bullish on the stock, I'm very concerned. So I kind of almost, you know, happy that they're doing that. So it's kind of funny to see the markets respond to the way that they are, just because they didn't meet some of the market estimates. But as you can see in a second here, things are doing well. So let's take a look right now at the financials that they uploaded here. Now, I'm not going to go into this too much, but we showed the revenues here before, but just looking at this kind of gives you an idea of what's going on. So, you know, under revenues, we have automotive sales. That's what I said right there, of 5 billion. Their total revenues were obviously more than that because it included their leasing and their energy storage and such. But even looking at automotive sales, rather, you can see how it's just skyrocketed over time here. March 31st, 3 months ended, 2019, it was about 3.5 billion. And a year ago, it was about 3.1 billion. So huge, significant growth, right? So they're really trying to drive production. And let's take a look right now at the financial statements here, they kind of have a consolidated statement of cash flows down here. One of the things that isn't too bad is if you just look at the one line here, net loss of about $389 million there. That's not so, I mean, it's not great, but it's not so bad compared to some of the quarters in the past. March 31st, 2019, we saw about 667 million. And of course, a year ago was way more, $742 million approximately, something like that, right? So even though we're seeing losses, the losses aren't so, catastrophic as they were before. So this could potentially be taken as a good thing. So, I mean, kind of a mixed bag in terms of results. Definitely like to see the demand increasing, and I can definitely see with the Model 3 why there's been so much demand there. It's kind of a silly thing that I always focus on. When you're investing, you kind of got to look outside in the real world. I know there's some stories out there that I've read on the internet about how guys have made millions. They just basically like lived their life, opened their eyes. And even where I live, I've seen so many more Model 3s. They're just like popping up everywhere, right? And I don't live in like a particularly big city or anything like that, right? So that's definitely something that's good. And what I'm looking forward to is when they start ramping production even more, a truck that comes out, right? So in the conference call, they talked about this is basically in line with what they said before. The China Shanghai factory is going to be slated to, I think, start production at the end of the year. The Y is still on track as well. And some news that just came out. Straubel, tell me if I'm saying his name wrong. He's the chief technology officer. He's actually stepping down from Tesla. So I think this is kind of something similar to what happened with Apple. I haven't really had too much time to think about it. Could be potentially something bad, although he says he's still going to be there just like an Apple. It's not any indication of his displeasure with the company or anything like that. But again, that's something that could be weighing on the stock right now as well. So what I'm going to be doing is I'm still going to be holding, like I said, I want to be holding until after the truck release, because I think that will be a pretty big driver for the stock. And I don't think these are that bad. I still think the stock could probably hit about 300, so I'll probably hold on until then. But I mean, the nature of Tesla is that it's just so incredibly risky, right? It's a spec stock, and I've been playing it a little bit, but it's kind of interesting to look at the results and to see what's going on. To sum it all up again, just growth, but not a huge focus on profitability. So we'll see how that changes going forward. They're still guiding for Q3 to be profitable. So if they're not there, then that could be really bad for the stock. So we'll wait and see what happens with that. Anyway, that's going to be it for today, guys, and I'll see you in the next one.